Hello everyone, welcome back to another episode. I'm your host, the Millennial Investor, and today we have a lot of information to go about with CCL stock. We're going to be going through all different pieces of information that you need to know whether or not Carnival Cruise Lines is a good investment for you. So in this video, all the things that we're going to break down, like I usually like to do, I want to give all my opinions on the stock, give you an idea whether or not it's a good investment for a growth/value opportunity. And what we're going to be starting off with, we're going to be looking at the price performance. We're going to see the past prices of this company and compare the performance to how it's looking at today. We're going to be going over the growing category of cruises in general before the Rona and just compare it to 2018 numbers compared to what we're facing today. We're going to be going over the financials of this company. You know that if you watch my channel, I like to value companies primarily on their financials, not just their business model, not just their management team. I like to look at the financials of a company because no matter how good a company is or how good its business model is, if they don't have good financials, then they don't have really good of anything. We're going to be going over book value per share and how this applies to CCL quite significantly. And then we're going to be comparing the financials again, but we're going to be looking at the financials compared with Carnival Cruise Lines to Norwegian Cruise Line Holding and Royal Caribbean. We're going to see the differences between these, and we're going to be looking at the recent quarter that they just reported and see how it faces up. And just real quick before we get started, I wanted to mention a comment that I absolutely loved here by Taylor Dennett. Thank you so much for your videos. I've already made over $3,800 in capital gains basically by following your advice on what stocks to buy and what to hold. You're probably the most transparent investor on YouTube. So thank you to Taylor Dennett that left that comment. I really appreciate awesome comments like these. And speaking of me being transparent, this is a go ahead in time for me to familiarize yourself with me. I am a dividend investor. My name is Jordan. I am the Millennial Investor, and I primarily invest in dividend stocks where I track my annual dividend income, my monthly dividend income, my portfolio value, and speaking of being the most transparent YouTuber out there, I even disclose my YouTube income, and there's all of my revenue broke down so far in the first 4 months on the platform, and while we'll be updating these numbers in about 2 weeks when we get to the end of August. But overall, guys, if you haven't watched me before and you want to support me, one of the ways that you can do that is by signing up by using this referral link, 3-in-1 Finance. This link is in the description of all of my videos. So if you just go to the description, go ahead and check out this referral link. You can get $10 just for signing up. And not to mention, there's lots of other information in that description as well, like other links and then also mentoring calls and information about me. So just go ahead and check out the description if you're interested. And then at the end of the video, of course, regardless of what we have to say about CCL, we'll be giving an update on every single stock that I own, just like always. But overall, guys, let's go ahead and jump straight into CCL stock. So let's just go ahead and give a snapshot of some of the main pieces of information that I wanted to point out here. Now, some of the information I'm going to be giving you coming up with CCL stock, I wanted to focus primarily on 2019 numbers. 2020 has not fully played out yet. We don't really know how good or how bad the recovery will be for this stock and for the story of this company. So I wanted to look at everything before Rona. Now, I know that 2020 is obviously a significant year for this company, but I will be evaluating both current numbers and past year numbers. So let's go ahead and start by looking at the market cap, $13 billion, which is significantly lower than what this company has ever been before. It's a little over 13. The price to sales ratio is a 0.63. Now, anytime you have a stock that's trading under a 1, that's under a 1.0, you know that the stock is automatically cheap. Now, I'm not talking about the business model, just talking about generally speaking. Let's look at some of these statistics. 0.6 is extremely cheap for any business model. Price to book ratio, which is one I want to go over in just a minute, 0.64. A 0.64 means that this company is literally worth better dead than alive. So book value per share was 27.5 before the Rona, which basically, if you don't know what that means, let's go ahead and jump over to the book value per share definition. Book value per share minus BVPS is a method to calculate the per share book value of a company based on common shareholders' equity in the company. The book value of a company is the difference between that company's total assets and total liabilities and not its share price in the market. Should the company dissolve, the book value per share indicates the dollar value remaining for common shareholders after all assets are liquidated and all debtors are paid. All assets are liquidated and all debtors are paid. So basically what that means is that if this company was to declare bankruptcy tomorrow, they would have to liquidate everything, convert everything into cash, sell all their cruise ships, take all their money, and pay back all the large debts that they have. Basically, essentially what this means is that if they were to declare bankruptcy, they would be worthly $27.50 a share. Now this was before Rona, so it's hard to know what that number is right now because there's so many moving parts with everything going on. But if I were to just throw out a ballpark guess, let's just go ahead and give an idea. Let's go ahead and say that this number is down to $15 a share. Let's say that it's down to about half of where it's at right now, and if you notice, the stock price is currently right around that price. It is about $15 per share. So let's go ahead and use that example. Now, next I want to point out the percent of float which shares are short. So what this means is people that are shorting the stock are betting the stock that will go down. So basically they're borrowing shares from their broker and they're betting that the stock will go down. Primarily these people tend to focus on stocks that they think are going to go bankrupt. 36% of short shares. 36%. That's one of the highest I've ever seen, especially of a company of this size. So more than a third of all shares that are publicly traded are short, not to mention not all the shares are currently bought and held by investors. So if I were to guess, probably half or maybe even more than half of the people that bought the stock are actually shorting the stock. So that's pretty incredible. 2019 revenue, $20.8 billion. 2019 net income was $2.99 billion, or basically $3 billion in net income in 2019. So let's go ahead and look at how that stocks up compared to these 2020 numbers. Now, if you see the share price here, this is on Carnival Cruise Line Investor Relations page, and this is their long-term growth chart. You can see that this went IPO about $4 a share, made a huge run up all the way until about the dot-com bubble in 2000, and it got all the way up to the 50s. Came back down to earth and came back to realistic levels, went back up in the early 2000s, went back up to the 50s, hit hard by the Great Recession, went down to about $20 a share, and then slowly trickled up, and then in 2018, 2017, we got back up to the 70s, $70 a share. The stock hit an all-time high, and considering that just 2 years ago the stock was $70+ a share, today it's trading at 15, and at one point during this recession, this stock was actually trading at $7 and some change, right around here. So that is incredible. You can see the low here. What was it? $7.80 was the absolute rock bottom. So if you could have picked it up at that price, that was a steal of a price. Now let's go ahead and look at the category of cruises in general. This is not Carnival Cruise Line, so these are all cruise ships in the entire world. And let's look at the growth category for this sector. South America and North America had a growth rate of both 9.4%, almost a double-digit growing category. Asia Pacific, 3.9%, Europe, 3.3%, and then every other place grew at about 12.4%. Do you notice a trend here? With the exception of Asia Pacific and Europe, almost all three of these five are almost double-digit growers. So this was a growing category before Rona. And then in 2018, the overall volume of passengers went up to 28.5 million, which was a 6.7% increase. Now, one thing I've noticed about the cruise industry in general, a lot of these cruise ships are primarily doing things for their cruise ships to target millennials. So I think once we get back to normal, I think that we will get to a lot better growth story for this stock once we get back on its feet and once this Rona passes and everything goes back to normal. Now, I want to look at the financials of this company like I spoke about. I want to focus on their revenues and their net income. This goes back to 2015, so the last 5 years. This is in millions, by the way, so basically this number adds 6 zeros behind it if you want to see the actual number. So you can see that it was $15.7 billion. It went up to $16.3 billion, $17.5 billion in 2017, $18.8 in 2018, and then up to almost $21 billion. So overall, it's a pretty good growth story for a large cruise stock like this. It's about a 35-ish% growth rate over the last 5 years, and its net income has went from $1.7 billion, 2.7, 2.6, 3.1, and then almost $3 billion in 2019. So overall, this is an extremely profitable company. They are doing just fine before the Rona, and the number of ships that they had were increasing from 99 all the way up to 104 in 2019. And actually, right before the Rona hit, about 6 months before in late 2019, they announced that they would be ramping up ship production. So I'm sure this number will probably be closer to 110, 115, maybe even 120 over the next couple of years if they aren't canceled because of this recession. And you can see the number of passengers carries and the passenger capacity both went up over the last 5 years. Now let's look at the financials of this company talking about the balance sheet. Now let's go ahead and start with Carnival because that's a stock that we're looking at. Now you can see that the amount of cash has went up significantly, and I mean significantly from where it was compared to where it was just a whopping 2 quarters ago or 6 months ago. It had about 500,000, or I should say 500 million. These numbers are in thousands. It had $500 million in cash, and now it has almost $7 billion in cash. Now, obviously, that came from debt issuances. So let's go ahead and see how long the long-term debt looks like for this company. They had about 10 billion in debt, 9.6, and now they have about 15. Now, what I like to look at for pretty much all companies, especially a company like this in a recession, I think that it's important to look at the long-term debt versus the cash. So the cash is about roughly 7 billion, and then the long-term debt is about $15 billion. So almost exactly a 1 to 2 ratio for cash to long-term debt. So basically what this means, if they were to take all their cash and to pay off all their long-term debt tomorrow, they would be able to pay off about half of it. Now, regardless of the category, regardless of the industry that they're in, about a 1 to 2 ratio is not bad. I have companies on my balance sheet that have a lot better than that in my stock portfolio, and I have stocks like that that have a lot worse, and I still are great investments. So let's go ahead and compare this to the other stocks in the category. Let's go ahead and look at Royal Caribbean. Now let's look at them. They have $4 billion in cash. They went up a lot, just like Carnival Cruise Lines. They have $4 billion in cash, but their long-term debt is almost 18. So literally about a 4.5, 5 times the amount of long-term debt to cash. So if they were to pay off all of their debt that they could available to them right now with the cash that they have, they would still have about 80% roughly of the amount of long-term debt that they would still have to pay off. They would still have over 10 billion plus that they would have to try to come up with, and they would have almost no way of financing that. Now let's go ahead and compare this to Norwegian Cruise Line. Once again, about a times 10 the amount of cash in just the last 2 quarters, 2.2 billion. This is a smaller of the three, and then 10 billion in long-term debt. So you can see that once again, it's about a 4.5, 5 times the amount of long-term debt to cash and cash equivalents. And while Carnival Cruise Lines doesn't have the prettiest balance sheet that you've ever seen, comparing it to these other two, it's just a joke, guys. In my opinion, if you're going to invest in any of these cruise stocks, Royal Caribbean and Norwegian Cruise Lines just pretty much has to be thrown out of the window because Carnival Cruise Lines is by far the best competitor of the three. And speaking of what I talked about growing category for CCL, one thing that I wanted to mention is that the cruise line sector in general, this is the dominant player in this market. By far, while it might look ugly, this is the best player in the cruise line sector. Now, one piece of information that you might already know, or maybe you don't, Carnival Cruise Lines makes up about 49% of worldwide cruises. 49%. So basically, it's essentially like flipping a coin. If you were to go blindfolded and you were to book a cruise with any random cruise company in the entire world, then this company is basically a triopoly where you have Royal Caribbean, Norwegian Cruise Lines, and Carnival Cruise Lines. But with Carnival, it is by far the dominant player, and it makes up 49% of worldwide cruises. And this is a stock that I think will continue to be the dominant player if you believe that the cruise line sector will stay afloat, no pun intended, in the long run. So with Carnival, let's go ahead and look at one of the reasons why that is. If we go to their investor relations page here, let's go ahead and look at the different brands that they have. They not only have the Carnival brand, they have many other cruise brands as well. You can see the list of them here. They have Carnival Cruise Lines, they have Princess Cruises, they have Holland America Line, Seabourn, Cunard, Costa Cruises, they have a Europe brand of Costa Cruises, they have Ada Cruises, they have P&O Cruises, they have Princess Cruises in the UK, and then they also have an Australian version of P&O Cruises, and basically this is a multi-brand cruise ship company, and you can see that Ada is one of their fastest growing categories for cruise lines. They have their dominant brand, Carnival Cruise Lines, which everybody knows and loves, which makes up of 27 different ships. This Costa brand is best for the Italian style and European style that's been growing rapidly. Cunard is one of the ones in the British area that is very high growing as well, just like Europe. You have Holland America Line, which is a premium cruise line ship. It's much similar to a Princess Cruises, which is the one that I really wanted to focus on. Princess Cruises is the world's third largest cruise line based on guest capacity, and the ships on these cruises are extremely high quality. They are so expensive, and these people that go on Princess Cruise Lines are more of your high-end clients. The people that go on Carnival Lines are more of your basic people that can't afford really expensive vacations, and they just try to get by and have some fun with what money they can afford. But when you're talking about Princess Cruise Lines focus on the high end. They primarily target customers that are going to be spending lots of money on casinos and gaming, going to be paying for luxurious spas, expensive dinners. These Princess Cruises are their money makers, and these are going to continue to thrive in the long run as they have these excellent diversification of brands in all different areas and all different types of markets. And I think that overall this is just a great company when there's not a once in a 100-year event going on. But overall, let's go ahead and give my opinion on the stock as to whether or not you should buy it. So if you're focused on a value play, if you don't care about what a stock does in the short term, if you're not focused on dividends, if you just want to buy a stock basically just for its value, and once it grows back into that normal value of what it should be placed at, I think that this is an excellent company to buy. Now, guess what? This isn't a super high growing stock. You're not going to double your money next year. You're not going to triple your money the year after that. But this is an easy money stock if you think the cruise industry is not going away forever. Because guess what? If people start bankrupting cruise ships, Carnival Cruise Lines is going to be the last one to go. They're financially the most healthy, they have the most ships, they have the most financial power, and they're the most dominant in their sector, and they're not going away. So basically, if you think that cruise lines are still going to be around 10, 15, 20 years from now, then go ahead and bet on Carnival Cruise Lines. And they do not pay dividends anymore. They did cut that down to zero, so ignore that dividend yield. But regardless, I think that this company is going to get back on its feet, and it might take a while, but eventually the stock will get back to the 20s, it'll get back to the 30s, and maybe even one day, a couple years from now, it'll even get back to the 40s and 50s several years down the line. And I think that this company will get back to profitability and it'll be an excellent stock to buy. So overall, guys, that pretty much wraps it up for Carnival Cruise Lines. I will give you a quick update on my portfolio. I'll scroll through every one of my positions. If you want to see them here, you can pause the video at any time if you want to see any of my positions. Okay, and let's go ahead and look at the performance on my portfolio. You can see that it is up 28.17% on a money-weighted return. On a time-weighted return, we're up $488.80, up to 17.05%. And if you look at my total gains here, we're up $584.52 worth of total gains, $552.74 coming from market gain, and $31.78 coming from earned dividends. You can see my activity tab here. We did get 2 referral bonuses just the other day. We got 20 bucks here, so that's part of what makes up the $22 cash. And then the other $2 worth of cash is partly coming from these 2 dividends I just received. NextEra Energy Partners, and I also received an awesome dividend from Realty Income. And it's cool to see these dividends grow, and I think it's easiest to see this with Realty Income because when I search ticker symbol O here, you can see while it only has 4 months worth of data, you can see it started off 60 cents to 70, 71. Now we're up to 83, and I'm sure next month's paycheck will probably be 90 cents to $1, if not even over $1. But you can see how it keeps on growing there, and I'm doing that with all 29 of the companies I own, and it's tracked right here on this chart. So if you appreciate the transparency, you appreciate all the information I provided for not only Carnival Cruise Lines, but all my dividend companies in general, I disclose everything. I always show my buys, my sells, my dividends, the stocks that I'm owning, information about what's going on in the market. So if you're new to the channel and you want to support me and you appreciate all this information that I'm providing for absolutely free for you guys, one of the ways you can support me, like I mentioned at the beginning of the video, is that you can use this referral link that's in the description. If you sign up using this link and then you deposit $100 into M1 Finance, which is an awesome free brokerage, no fees whatsoever. If you go ahead and do that, you'll get $10 just for signing up, and I'll get $10 as well, which will help support me and my channel to help make me better videos and also, more importantly, grow this dividend portfolio. But overall, guys, if you made it all the way to the end, go ahead and leave a comment down below what you thought about this video, any questions you might have for me, any questions you might have about the stocks that I own, or anything you might want to know about Carnival Cruise Lines. I would love to answer any questions that you guys have. Feel free to share any of your portfolios. I'd love to review them, and anything else I can help you with, guys, just like I said, leave it down below. Thank you guys so much for watching. I'll see you guys next time.